discount to global peers that are in a much worse situation.
It's interesting you say that you think that the price of default is exaggerated at the moment, or the risk of default is exaggerated at the moment. Even so, we will see defaults in the region. Probably it's more or less inevitable given the deterioration in the economic environment. As a bondholder, as a sukuk holder, what recourse do you have in the event of a default in the market?
First of all, I don't think it's self-evident that you're going to have a tremendous amount of defaults. Yes, you may have restructurings, but first of all, because it's a very young market, so the actual issuers that do have sukuks and bonds outstanding tend to be government-related entities or very blue-chip corporates, and it's in the interest of basically the policymakers to support them, and I think they will be receiving that support. Traditionally or historically, you don't have a history of defaults in the region. So actually, I don't think you're going to have the same amount of defaults that you have projected in, for example, international markets. And even if you did, and I think by last measure, the cumulative losses are expected internationally come to about 15%. So even if you were to take that into account, the levels at which we're trading are significantly, or expect even more than that. So I think there's a real divergence between the credit fundamentals of these issuers that are outstanding and the prices at which they are trading. So I reiterate that we don't see significant defaults coming out of the region. We expect further government support, and so therefore we think that people that are a little bit patient will ultimately be rewarded by that investment decision.
What impact are we seeing on conventional investors? Because obviously they provided the bulk of the buying of sukuk issues traditionally. Are we seeing them sort of fleeing?
Well, I think everyone that's involved in both the sukuk and the conventional market are under extreme pressure. And this is what I alluded to earlier in terms of debt. I mean, the only people that really hold, it's a very institutional market. So the players, if you want, are commercial banks in the region. They're international broker-dealers and banks, and you have certain amounts of hedge funds, etc. All three of these market participants, are under pressure right now. They need liquidity, they need to delever, they need to close down prop desks, they need to reduce risk, they need to reduce leverage and exposure. So all of them are in selling mode, if you want, and you don't have the other pools of money if you want to stand in their face. And so this is why, on the cash side, the market is dislocated and you have the opportunities that you have. And this applies to conventional as well as sukuk issues. If you talked about the CDS market, that one is even more technical because the people that could theoretically sell protection on these names aren't valid counterparties. And so what you end up having is a very small group of players involved in creating a fictional market on these CDSs, and it's out of proportion, I think, with the credit realities. And that's why you have these 2,000 and 3,000 sort of basis point spreads for government-related entities, or why you would have the government of Abu Dhabi trading in line with Turkey, for example, or Dubai in line with Iceland, where clearly their balance sheets and their macroeconomic fundamentals are significantly stronger.
As an investor, what impact are the IFI rulings on sukuk having on you?
As a general business, with respect to the fund, it hasn't been very material because ultimately they've allowed us to continue to hold and trade existing sukuk. So, thankfully they haven't grandfathered what's already been issued. Going forward, I think the market, as I mentioned earlier, does have some challenges, but I don't think the IOFI ruling are the primary challenge or problem. I think we're really looking at the global credit market and functioning primary markets as a primary risk, if you want, to issuance. So in that sense, it's been fine. I think going forward, as a business, it does create some apprehension as to how large the sukuk market is going to be and in what direction it's going to develop. But I do feel that it's not going to be as negative as people seem to say. I think this is a natural evolution of the sukuk market's growth. I think it's a healthy development, and I think in the environment that we're in, issuers are ultimately now a little bit more willing to, if you want, compromise and come up with issues that are much more in line with Sharia principles. And ultimately, this is what we all want. We would like to see a sukuk market that is much more in line with Sharia principles and is not just, if you want, cosmetically Islamic, but in real spirit and application tends to conform with Sharia principles.
Dino Kronfol, thank you very much for your time.